Good evening and welcome to the Numbers Guy stock pick for the trading week beginning Monday, August 23rd. What we have here this week is Pepco Holdings, stock symbol POM on the New York Stock Exchange. We're going to be looking at a trade to the short side this week. Just to refresh your memory, the charts that we're looking at here, you've got the price chart up top, drawn a couple of moving averages, the 20, 50, and 200-day exponential moving averages in the orange, blue, and gold colors respectively. We've got the green bars here, which represent the green lines here, which represent the 20-period price channel. Those are the things that we like to look at. Drawn a couple of trend lines here in black. In the bottom part of the chart, we've got the technical indicators, the MACD, the moving average convergence divergence, force index, and money flow index. When you look at the daily chart, you can see that the stock over the last couple months has been making some nice upwardly moves in terms of price. It's been making higher highs as well as higher lows on the prices on the peaks and valleys. This price action is divergent from the lower highs that it's been making on the MACD histogram. As you can see, the downward trend here. Same thing that you see on the force index. Same thing on the money flow index. You can see right back here at the beginning of August, it peaked and showed some oversold condition. But again, the stock really hit that middle of the price channel and continued to bounce up and make another higher high. So again, flashing some bearish divergent signals. You see this dashed line here. This is on the 2.5 million share line. You can see the only time it really pierced through in any significant manner, that 2.5 million shares, was back here at the end of June. We point that out for the reason being that when you looked at the last trough that the stock made in the May to June timeframe, you can see all the days, probably 10 plus days, that the stock was trading over 2.5 million shares. So again, we point that out because you can see on the downward trend several days over 2.5 million. On this upwardly trend that's lasted a little bit longer, has really not pierced the 2.5 million share range. So again, we view that as bearish as well, as we've pointed out here in the red arrow. Let's talk about entries and exits this week. Price entry, we're going to look at the 1785 range. This was the close on Friday. If you can get in anywhere in the $17.85 to $18 range, we think that's a great entry. Protective stop is going to be set at $18.18. This is 11 cents above the high of last week, which was $18.07. We don't want to set it too close to avoid any noise, and most amateurs setting the stops right at that price could again force this thing to tick up a couple of cents, a few cents over, and we don't want to get stopped out too prematurely if this thing does get away from us early. So going to set it at 18.18. That's roughly, if you get in at 17.85, that's about 33 cents to the downside. Our price target, first price target, is going to be set at 17.42. We see that there is probably that's kind of in the resistance zone right over here, 17.42. A good first target. That's going to be some support that you can see the stock has right here, and we're going to look at this in a 5 to 10 day duration for this trade. So that's kind of some short-term support level. You may want to consider taking 50% of the profits out if you can get in and the stock does move in that direction. Our ultimate price target really is this 17.08. This is where we're really going to look again to make some serious cash on this trade. So you can see here, that's probably your next line of support for the stock. So again, as we mentioned, if you get it 17.85, 33 cents to the downside, you've got about 78 cents here if you hit this second price target. So that's over 2 to 1 reward to risk ratio, around 2.5 to 1. So that's a pretty good trade. We think, again, 5 to 10 days for the duration of this trade is reasonable, but we do like to see the stock pull back to that 20-day EMA, if not the 20-period channel, and possibly breach through there and breach through the trend line on its way down to the 50-day EMA, but which is at 1692. So we'll continue to monitor this during the week, but we do believe that there is some bearish indications here that would allow us to get into the trade and look to take some quick profits off the table. We will continue to update you during the week for the trade. And another thing before we go to point out, right down here we're showing the short interest in the stock. You can see April through July, the short interest continues to increase, which again we view that as a bearish signal. Certainly, as a percentage of the outstanding shares continue to increase as well as the days to cover. Some people might say that that is take a contrarian point of view and say that the stock can continue to move up, and thereby getting a short squeeze with all these with all the increasing short interest in the stock. But again, based on the other signals that we mentioned, the technical indicators and the divergence that we've seen in the technical indicators, we believe this to be another bearish signal, along with all the other things that we've mentioned tonight. So again, we will continue to update everybody on the trade this week as the action takes off on Monday and progresses, and we wish everybody luck with this one. We will talk to you soon, and good luck and happy trading this week.